99.9% of all homeowners policies, they exclude flood.
Okay.
Oh, I didn't know that.
Yeah, I didn't know that either.
If you want flood coverage, you can buy a flood policy.
But it's almost like you have to be the one to almost ask about it unless it was like, I guess, glaringly obvious from where the property sat.
Right.
Like if it wasn't in a FEMA flood zone, would it really be more the consumer asking you, hey, what about flood insurance? Do I need flood insurance?
Well, here's what I say to that is every home in America is in a flood zone, right?
Yeah.
Whether you are in a 100-year zone,
yep,
or a 1 in a 1,000-year zone.
Is that really? Those are the gauges?
That's how they kind of give you that. Like, what's the likelihood?
Yeah.
Or, how they kind of rate it out.
Welcome to the podcast dedicated to real estate, insurance, and building your business. Join us as we take you along our own business building journeys with additional wisdom from our network of local and national experts. Welcome to Bricks and Risk. Hey everyone, welcome to another episode of Bricks and Risk. I'm Timmy G.
And I'm Sean Mooney.
What's going on, homeboy?
What's going on? Nothing.
What was going on last night?
We had our Bricks and Risk community outing night.
We did our second Bricks and Risk networking happy hour. We had it right here at Bar John in Manayunk. What's up, Dave and Anna?
Hey, Bar John. Great night. Great place to have an event. Food and drink were spectacular.
What was your favorite pizza?
I only had one.
Did you just have the plain?
No, I had pepperoni.
Okay. I didn't get to try, I think it was called like the John or the Bar John. It was like a white pizza.
Oh.
And that one, like I literally went up to get pizza and it was gone already. So
man, I think I saw a picture of that one on Instagram and I was like, oh, that looks real. Like
we should have gotten 3 of those.
Yeah.
But all right, let's get into
I like the pepperoni had like peppers, like hot peppers on it.
Yeah.
A nice little touch. Yeah.
All right, what are we getting into today?
Keon was actually at the event last night.
What's up, Key? Why don't we read his listener watcher review first?
Hit it up.
So this one comes from Keon Whiting. It's titled Super Great Podcast. And it reads, this is a great podcast, super insightful and educational. Can't wait for more upcoming episodes. Thanks, Key. Appreciate the kind words, man. Glad you're enjoying it.
I'm trying to persuade him to start his own podcast.
Oh, yeah. There was some chatter last night. People had podcast questions.
Yeah.
Which we love. Like, I love coming across people now that say, hey, can you introduce me to Dill and Terry at Yunk Junk? Because I'm interested in learning more about the studio, about what they offer, about, what the opportunities are to do some video content, some podcast content.
Especially Keon, being on the show, seeing the setup, and then talking about like where we started with the podcast, where we are now, the kind of reach we're getting, the kind of views we're getting.
Yeah.
I think it just starts to, get the gears going in terms of like, man, could I do that? Would it be worth it?
Yeah.
So I think it's, a lot of good conversations. And I told him, I was like, if there's anything that we can do, let us know. Happy to help.
Yeah.
So
awesome. All right. What are we getting into today?
So today's episode, we are going to be talking about Zillow and their online site and how they're rolling into listings. Kind of like, I don't know if I would call it an added feature.
Yeah, I would say it's an added feature.
So what they're doing is on each listing that they have, they're going to give you a climate risk score.
Right up your alley, man.
Yeah. So we'll get into that in terms of how it's detailed and what's kind of baked in to the scoring.
What are your initial impressions on being let's say you're a consumer, Zillow is a consumer-facing residential real estate-based website.
Yeah.
And you're in insurance. You're in the risk business.
Yeah.
What are your thoughts on them putting that feature out there, not only for someone like you who's educated on risk, but for someone who's not?
So I like it. I don't like, just to start, not Zillow specific, right? Anytime that there's more information for the consumer, I'm for it, right? So whichever way you want to slice it or dice it, if the consumer who's searching for, in this case, a property, right? Anytime you have more information for the client, I am pro that.
Yeah, me too. I mean, there's lots of different things that Zillow has on there. They'll have like a walk score. Sometimes they'll have like a biking score.
Yep.
Because like they just want people to learn about these properties through their portal. They're basically in the information business. They're in the portal
They're a data
business.
company.
Exactly.
Yep.
So I agree. I think this is a good feature not only for consumers. I think it's good for agents. I think it's another opportunity for people to get educated about things, like someone such as myself saying, hey, if you're concerned about that, did you look at the feature on Zillow about the climate risk?
It's bringing awareness.
Exactly.
And providing a little bit more depth of information for the consumer.
Yep, totally agree. So here's a really interesting stat, and let me know if you agree with this. So when we pulled up this article, this came from the nothing divided by nothing equals nothing sheet.
Who came up with that?
You.
Right.
I mean, I think everyone knows by now I would never name something that. But hey, to each their own.
Yeah.
It said more than 80% of potential home buyers now consider climate risks when choosing a home. So 8 out of 10, 4 out of 5, when they go look for a property now, they use that as a consideration of, should I buy this asset?
I don't know if I agree with that number.
It seems a little high.
I'd like to see, like they pull it from here and they say this.
You'd like to see the data behind it.
Yeah. Because if you think about it, you work with buyers.
Yep.
I don't know if many are coming to you with those questions to say, how many beds, how many bathrooms, what square footage, and is there a likelihood of brush fire?
Yep.
Or flooding, or,
Yep.
I don't think it's top of mind for a consumer. So I think it's more they poll people and they say, hey, are you concerned with, environmental hazard? And they say, oh, yeah.
Yeah.
It is.
Yeah, I think it's probably more like
so
that.
that's where you get it. Plus, the person polling the information, the more likely it is for them to get a higher number, then they can go to Zillow and say, look, 80% of the people that we polled are interested in this. You want to have this on your site.
Yeah, right.
Right?
No, I think it's a very fair point.
So I think that this particular number, without knowing all of the detail, might be higher than what I would expect.
I would agree. And so I'll give a little bit of a real estate perspective on this one. So let's say that's true and 80% of people consider climate risk before evaluating a home to buy, or at least it's on their radar of, would I want to know what the climate risk is or not? I'm going to say a lot of people would say yes.
Well, the other thing too is, are all these people in California? Right. So like if it's a California specific poll, those numbers are going to be much higher because you have a lot more climate risk in California.
I'll give two really good examples from myself recently. One was I had a listing around here locally, and the home was next to like what I would consider like a smaller creek. I don't even know the name of the creek.
Crick or creek?
I say creek. You say crick?
Crick.
Like crick shoes?
Yeah.
Oh, okay. So the home is next to a creek, but the creek was pretty low. Like you never know. Sometimes around like creeks or rivers, like the land is kind of flat around it, so therefore it feels like more of a risk. This one was like probably like 15-foot differential between where the house sat and where the creek was. And I will tell you, listing that property, it took a little bit to sell. The number one concern that either buyers or agents were asking me about before like trying to either show interest or get more information about the home was, what's up with the creek? They would literally say like, what's up with that? And I'm like, okay, well, if you look at a FEMA flood map, you're going to have flood insurance because it's right there. So there's that risk. What concerns do you have about the creek? Like, what are you worried about? Well, has the creek ever flooded to the point where it's reached the home? And the people that were there were living there for many decades, and it had never made its way into the home, which was good. So that's one instance where it's like, I'm selling this property on face value. Like, why would this be an issue? It's far away. But yet almost every person, agent or buyer alike, asked about it to understand what kind of risk is the creek. And then the second one is a developer client of mine. We were looking just for like lot opportunities in and around like my area. And there was one like not too far from me. I was like, did you see that sign out there for that particular lot? And without me even thinking, he's like, dude, that's like totally like in a floodplain. It was like the first thing out of his mouth. Not like it's overpriced or I have to, maybe take down some trees or some shrubbery and level out the ground in order to build there. His first thought was like, dude, that's totally in a floodplain. And I'm like, well, there's a couple homes right around there. He's like, yeah, but those are older homes. And my guess is they've probably had flooding issues over time. So it's almost like going forward now, he saw the risk of like, I don't want to know anything even about the numbers, knowing that the proximity it already has to that creek, which I thought was interesting. And I would say like in my 15 years of residential real estate, it hasn't really come up that often up until like the last like few years with some of the storms, like maybe after Sandy. I think Sandy was probably one of the bigger ones that impacted our immediate area that I feel like is just on people's minds, especially from like the South Jersey Shore and, everything that happened, the rivers in and around Philly.
Yeah. Sandy was a big one. In our area, I think actually Sandy actually, and I'm only aware because claims and all of that. Sandy wasn't that big in our area. It was actually, it was the week after. So it was like Sandy came through and just dumped a whole bunch of rain.
Yep.
And everything was like saturated. And then I think it was maybe not a week, but a few days after that specific date, there was another storm where we got a lot more, because Sandy was more, Jersey coast and came in that way. But we had a storm a few days after, and that was like everything had been waterlogged. And then that storm came in with winds, because that was, once everything gets wet, all the trees and everything get loose. And then when it comes through with wind, everything just falls over. More inclined to.
There's only so many places water can go. So if the ground is full of water from a storm, when you get another storm, it's just going to start overflowing.
Here's a question.
Yeah.
If you wear Crick shoes, where do you wear the Crick shoes to?
To the creek.
To the creek.
You've always said crick?
Crick.
That's funny.
But isn't it, why wouldn't you call them creek shoes?
I would call them crick shoes. I was making a joke about your accent earlier. That's why I said crick shoes. Yeah. So just so we're clear, everyone.
Just wanted to get that defined.
So let's talk about, from an insurance standpoint, like the fact that 80% of people now consider climate risk when buying a house. How do you look at that from like, let's call it Mooney insurance brokers? Like, why does that matter to your business versus like when someone wasn't really talking about it like years ago, let's say?
Well, I think it's getting people more informed. So it's like I said before, bringing the awareness to the consumer. So I like it, generally speaking, because it's prompting people to maybe ask more questions, to get into more conversations about, hey, what, like, this is the score. This is what this is telling me for a flood exposure.
Yeah, there's like a gauge now.
Yeah.
Oh, this one's an 85. I mean, I'm just throwing a number out there.
Yeah.
But you'd be like, oh yeah, 80, 85. Yep. That's high up.
Yeah.
That's going to be more expensive. Like, think of this, think of that.
So having the consumer be more aware is always good, right? And it opens the door for a deeper conversation about the coverage under your homeowners. Oh, how does this impact my home? Well, first off, flood is always excluded. Under 99.9% of all homeowners policies, they exclude flood.
Okay.
Oh, I didn't know that.
Yeah, I didn't know that either.
If you want flood coverage, you can buy a flood policy.
But it's almost like you have to be the one to almost ask about it unless it was like, I guess, glaringly obvious from where the property sat.
Right.
Like if it wasn't in a FEMA flood zone, would it really be more the consumer asking you, hey, what about flood insurance? Do I need flood insurance?
Well, here's what I say to that is every home in America is in a flood zone, right?
Yeah.
Whether you are in a 100-year zone,
Yep.
or a 1 in a 1,000-year zone.
Is that really? Those are the gauges?
That's how they kind of give you that. Like, what's the likelihood?
Yeah.
Or, how they kind of rate it out.
Interesting.
Yeah. And it's an X zone, an A zone, AE zone, are some of the common ones. But having that conversation to educate the consumer. Oh, I didn't know that. Oh, how flood? Okay, $450 for a flood policy. Oh, well, that seems, like something I'd like to have.
Yeah.
Right? Or, well, if it's not flood, if it's coverage in my home, because we get that a lot too, is people think, oh, water is flooding, like a broken pipe is flooding, right?
Right.
It's not.
Yeah.
But it allows the conversation, allows people, the consumer, to better understand what the coverage is going to be under your homeowner's policy, and then obviously separately under a flood or an earthquake or, something beyond the traditional home policy.
How common would you say, so just doing like homeowners insurance in and around Philadelphia, how common is it that your clients have, like what would they call it, a flood rider or just flood insurance? That people get flood insurance as part of their homeowners insurance. How common is it these days? Is it like 50%? Is it like 10%?
So the vast majority when it's bank required. So if your home is located in a zone where the bank is going to require it 100% of the time, the bank's going to say you need this in this home, and that is the requirement.
And
so
that's based off of FEMA flood maps and things like that. That's how they say you need it, or
if you're in this zone, yep, exactly. And actually, remember, I don't know if you remember there was a building in Ambler that I was looking at years ago that actually had the
had that little crick
running
behind it.
Yep. And so that one for me was part of the reasoning why I didn't want to pursue it. Not the only reason, but one of the reasons.
Interesting.
But outside of that, the normal consumer, like what percentage of people decide to just opt in for the coverage?
That you see.
I would say probably, if I had to pull a number, 20%.
Okay.
25%.
Like 1 out of 5, 1 out of 4 is saying, I want to learn more about flood insurance for whatever reason.
No, I want that. Like we get into the conversation, flood's excluded. Okay. I want that.
Can we talk about it? Yeah.
Yeah, add that onto my coverage.
Wow. Interesting. That's harder than I thought, actually.
Yeah.
All right, so let's talk about this kind of like from like Zillow's perspective.
Yeah.
Zillow, again, consumer-facing portal, providing information and data for people looking to buy real estate, sell real estate, rent real estate, invest in real estate. But Zillow is also an agent-facing portal, meaning agents pay money to Zillow to meet more clients. They want leads, they want opportunities, and they have all sorts of different programs. One way I think Zillow has looked at this in a strategic way is they're like, if we're a data company, we're gathering data and there's value to the data, why don't we add some more data for something that comes up more often, which is, climate risk. And what I think they did that was really smart, rather than just like reinvent the wheel, be like, oh, like let's do our own research, let's do our own study, like let's put up the Zillow, whatever. They partnered with a company called First Street, which you said you heard of.
Yep.
And First Street's website, it's pretty interesting. It says, we leverage the most advanced climate science and engineering approaches to quantify and communicate the risk for every property in the country. Like, that's a pretty feel-good statement as part of their mission, meaning they're like, we want to look at every single property in the United States of America, and we want to give it a score, a grade. We want to show what the level of risk is on it. And then Zillow kind of just like swooped in and said like, hey, why don't we work together? Instead of working against each other, like, why don't we do our own thing and we'll have the Zillow gauge. They went to First Street and said, can we use your data that's already been done and, you know, you guys specialize in this. Can we do that and connect it to our site? And I'm sure both of them are getting something out of it. I mean, there's no doubt.
Yeah.
But it's good for consumers. It's good for agents. Like you said, it's adding transparency. Like, it's good to get information like that because that way you can assess risk before you buy something.
Here's where I don't know where it goes. I think that I can imagine a scenario where you're selling your house and your score comes back pretty bad. And
someone like says, why are you ruining the value of my property by having that data out there? Yeah.
So here, and what brought to mind one scenario that we deal with from an insurance perspective is, we've talked about this in previous episodes, is roofs and roof age. And insurance companies now, because of access to drones and satellite imagery and all of that, they're starting to score your roof.
Really?
Yeah. So like when we put in an address to write homeowners insurance,
like a 1 out of 10, 1 out of 100?
1 out of 100, they're going to score you. And I don't know how the inputs are taking to get that score.
Yeah, like that algorithm.
But I imagine it's a multitude of, county sites giving, roof permits, and so that they can pull that to see, it was done in 5 years. Yeah. We're going to give it a good score. Bleeding, leaching on the actual roof itself, like roof staining, you can kind of see. And over time, like that's the other thing too, is they can do time lapse.
Oh, wow.
So they can see staining up to 5 years ago, and then that stain is all gone and it looks like a new roof, so that the AI systems that they're using can almost make the decision, or at least an inference on that data, that
have an opinion on it.
This is a newer roof. Wow. That roof was replaced.
That's crazy.
Yeah. So it's all modeling that they're using to come up with these things. But I have to think that if they were to implement that type of thing, like if Zillow was to take it upon themselves to take that information and say, hey, in addition to the climate score, we're going to give you a roof score, so that the buyers know what condition this roof is. Like, someone's going to be like, you gave me an 82. That's hurting
my roof is brand new. Why am I on an 82?
Yeah.
Well, here, dude, I got a really interesting comparison, an analogy, because you're saying look, if Zillow puts that information out there and a consumer looks at it and says, I don't want to buy your house, or I want to pay a lot less because your climate risk score is high, then the seller would technically have grounds to go to someone like Zillow and be like, hey, you can't just be putting this information.
Harming me.
Yeah.
Financially harming me.
Right.
Yeah.
So I'll give you a really good example of something that's not the same, but similar. And this happened when I was living in Philadelphia in the Roxborough section, that in the city all the time, they want to...
Shout out Roxborough.
Shout out to Roxborough. In the city, they want to preserve history. They want to preserve architecture. They want to preserve the look of things, structure. Like, you go to Chestnut Hill, if you're from in and around this area, there's Belgian block in the streets still. All the places look super old. Why is that? It's historically designated. So the story was that everything along Ridge Avenue, there's a lot of big lots, a lot of favorable zoning. They were starting to tear down some very architecturally significant buildings, and then they were building new construction apartments or mixed use or whatever. And people were up in arms why are they just able to tear these things down? So then the city got involved, and after much back and forth, they designated a large portion of Ridge Avenue as historic preservation, historically protected from people tearing things down and whatever.
Is Peck Miller's part of the historical protection?
Technically, yes.
Yeah?
It is.
Really?
I mean, it's all along that.
I didn't know if it was like a certain set of blocks or if it was like the wide expanse of ridge.
Actually, you know what? Now that off the top of my head, I think it's like spotty. It's not like 100%. Maybe it's like 80% or
like
whatever.
This block and
this
that
was built in 1965 to like tear it down if you want, kind of thing.
Yeah.
But I do remember conversations with neighbors because I was part of the Roxborough Development Corporation back then, and they're like, "This is devaluing my property," because they were like, "What if I want to sell it to someone for the land, and I want them to tear it down and build because my land is worth more than the house that sits on it? It's just like the size of the lot was the valuable piece." Or if someone owned a property and someone wanted to buy the property, let's say not for the land, but for the home, they're like, now they have to like follow the guidelines of the historic designation. Okay, you got to put wood windows in. They're more expensive. You can't mess with the facade. You know, if there's a light involved, it has to be this kind of a light. So now the cost to rehab or repair goes up significantly for the person buying the property. So yeah, I know for a fact, home sellers and homeowners that were up in arms about the historic designation.
I'll give you one even better.
Yeah, please do.
On the insurance side of things. So on every application, is this home designated on a historical registry?
Really?
Yes. Reason being,
Every application?
yeah. Reason being, the insurance company wants to know if this home has a claim.
Oh, wow.
The reconstruction
It's
cost
going to be more expensive.
way more.
Wow. I never thought of that.
Most insurance companies don't want it.
Right.
So they ask, yes, decline.
Is there like a public record system for historically?
Yeah, so
designated
where it
properties?
gets weird, what I've found, because I've had these risks come up with clients buying these properties, is that there's a local historical registry, there's a federal historical registry, and I think a statewide.
Oh, really?
Yeah.
Which one's is federal the highest? I'm
Federal
assuming?
being, yeah.
And they probably have access to the federal one.
Yeah.
Gotcha.
So it just creates these layers from an insurance perspective where we don't want it. Like, we don't even want to bother with a home that's designated, a historical home, because there's so much more red tape. There's so much more. If you think about the engineering, the materials that you would need to kind of be acceptable.
Builder grade is not acceptable.
And the zoning and everything that you would need to go through, the hurdles to get compliant with that.
Yep.
It's just, they don't want it.
Interesting.
Yeah.
Hey everyone, this is Tim, your favorite Bricks and Risk co-host. But don't tell Sean. I hope you're enjoying this episode, and I'll get right back to it in a moment. Our audience grows through word of mouth, so if you would please take a moment of your time and give us a review on the platform you're on, that would be fantastic. Please also help spread the B&R word by sharing your favorite episode with a friend. We greatly appreciate your time and trust. Now, back to the show. All right, so back to First Street. So there's 5 key climate risks that they're looking at as part of this score that's going to be on Zillow.
Yeah.
So it's flood, wildfire, wind, heat, and air quality.
Yeah.
Which is interesting.
Yeah.
How does air quality play into insurance? Does it or does it not?
I mean, maybe in different areas of the country, I'd assume. Right. Maybe, potentially, but nothing that I've ever seen.
Okay. Do you agree with those? Do you think all of those, like, is heat just like how hot, like if it's in the desert, like the heat could potentially ruin like the quality of your property?
I don't think it's measuring it with specifically to insurance, right? This is more for the consumer that, in this area, your property may have like scored an average home temperature above 80 degrees for the year or some
Right, yeah.
calculation to let you be aware. Like if you're moving from Chicago to Phoenix,
Right.
you might want to be aware.
You didn't know that it gets up to $1.15, $1.20 in the summertime.
Yeah. Air quality, obviously, in like, urban cities,
Yep.
that's going to be a concern. So I think it's just something that they put together as key indicators for consumers to be aware of.
That's interesting.
Yeah.
All right, so here was another thing I thought was interesting from First Street. So they said they're there to protect. Now, get this number. Real estate in the U.S. is worth over $45 trillion. So you think about all the real estate in the U.S. That's what they're
gonna have
valuing
Dylan do like a graph or something and try to like fill this room with.
We're gonna show him on his iPhone. He's gonna be like using the iPhone calculator.
Yeah.
And
How many?
calculating 40.
How much is this 45?
What does 45 trillion
Really
look like
not
on a calculator?
Yeah.
So, and it says they want to protect values through data. So I think this goes back to your original question. I think it really goes both ways. If you're a buyer and you're looking at a website like a portal like Zillow to shop for a home, you seeing this climate risk score is going to be valuable to you because it helps you determine which home, which asset you potentially want to buy. Now, the flip side is that maybe a seller who didn't have this climate risk score before on Zillow, now that it's out there, it could be devaluing their home because everyone's seeing this stuff. So then there's the argument there. And honestly, it really comes back to what you said. The word you said was transparency. And I think, you and I, we run our businesses these ways, our lives, being transparent with clients, open and honest. Honesty is the best policy. I actually think this transparency is a good move for everyone. While there might be a subset of sellers who will be upset, there's also a subset of buyers who were upset by not having this.
Well,
data.
So the solution being, I think if your home gets listed, Zillow scores it out, there should be like a delete button. Like if you don't want us to have this score.
You're saying the homeowner / seller should have an opportunity to say, I don't want that out there.
Yeah. Well, it's like, okay, so to draw a parallel, Google has a picture of every home in America.
Yep.
Right?
Right.
If you didn't sign up for it, you can email Google and have them blur out your house.
Oh yeah, I have seen that.
Yeah.
That's interesting.
Because I don't want I'm a private person. I don't want
people looking at my stuff.
Yeah.
Or potentially me walking outside because sometimes it catches human beings too.
Right. That guy on TikTok who's like,
I was in my boxers that day in my terry cloth robe.
I like when they shoot by on the car and the guy gives the middle finger. Those are my favorite. That show up on the map.
Right. But they blur out the finger.
Yeah. But there's so similarly, just as Google gives you an opt out,
right?
I think something like this should be a scenario where, and it'd probably be good for Zillow if they don't catch a lawsuit by a bad score or something.
Okay.
But overall, generally speaking, more information for the consumer, including this in terms of a score, is what I see as a benefit or a positive.
All right, so let's get to the final part of this topic with climate risk. So it's really like, is this a good thing or a bad thing? But I want you to say, is it a good thing or bad thing for insurance? Not necessarily for the consumer.
Yeah.
Do you think having something like this out on the #1 portal website for residential real estate, which is Zillow, do you think them putting this out there with First Street is a good thing or a bad thing for the insurance industry?
I say good.
Okay.
Good because more information prompts more conversations. More conversations equal a better understanding of what's included in their homeowners and what's not. And so I say it's a good thing because it's more education for the client, for the consumer. So overall, a net positive specifically for insurance.
Do you think the industry gets tighter from something like this? So now that there is more information from the consumer, from that glass half empty Mooney perspective, do you think the insurance companies are going to look at this and be like, this is just one more reason why we should overanalyze our risk?
Going back to the Rob Shuck episode.
What's up, Robbie?
Anytime there's more information, so years ago, I tell people, when we used to do auto insurance, home insurance, when I started, it was like 5 rating factors that how old are you? What kind of car? Have you had any accidents? Very basic stuff.
Yep.
Now there's like thousands of inputs that they're using. So the more data that these companies have, the more leverage they have to rate against. So anytime there's more information, it is going to allow these companies to use it.
Yeah, so it's almost like we're still in this hard market right now, where we've had the conversation on past episodes. Sean's done some incredible ones on insurance, really educating our audience about things to look out for or what's happening in the industry. And insurance for, let's say, homeowners insurance, because that's what we're relating this to. Mm-hmm. It's almost like the insurance companies in this market are looking for reasons not to insure someone.
Yes.
Because the losses have been stacking up for years. And they're like, we don't want more people who potentially give us more loss.
Yep.
So, from that perspective, I guess it is a good thing because, again, if their losses are stacking up, I think you would call it before they take rate, right? Is that the term?
Yeah.
And that means they're either trying to just take it right from the consumer and say, hey, your bill went up, or they're going to their local, municipality or state? It's state driven?
Everything gets filed through the state.
Okay.
And you need their approval. So if you file for a 20% increase, the state has to look at your numbers, look at your claims paid, and that sort of thing, and then make the determination, yes, this is within the bounds of what's acceptable. Or they say it's not acceptable. Your number should be 14%. So
they'll
they
be
kind
the
of
ones dictating what the final number is.
Yep.
Gotcha.
Yeah.
Okay. And then let's talk about it from a real estate standpoint. Do I think, the First Street climate risk indicator on Zillow is a good thing or a bad thing? I'm the same as you. I think it's a good thing. I mean, the best way I can put it is that...
I wonder if Tucci would agree, being the listing agent.
Maybe not. He's probably going to get more flack than me.
Yeah.
I mean, I do a little bit of both. I'm right around 50-50, 60-40, 60 listing, 40 buyer, or 50 listing, 50 buyer,
Yeah.
Somewhere in that range, year in, year out. So I see it from both sides. But I think from a buying standpoint, this is a good thing because it allows someone to assess the vulnerability of their asset. Because when someone goes to buy a house, they come to me and say, hey, Tim, I want to buy a house in this neighborhood. Here's my price range, beds and baths, all this stuff. And they have kind of a general understanding of how much that might cost because they've probably just gone online and done a few mortgage calculators and okay, I get it. Or if you're really prepared, you go get a pre-approval for a property in the neighborhood you want, and that pre-approval is really going to dial in what it costs to own this property. But when you do those basic steps with someone like me or a loan officer up front, you're not really thinking about what happens after I own it. You're really looking at it as okay,
in the home.
Yeah, if it's a couple, let's say it's, 2 people, they both work. They're here's the income we bring in, and this is what the debt is if we buy the house. It's called a debt to income ratio. That's a level of risk for mortgage companies to say, this is what you can afford and this is what you can't afford. But what no one really calculates is what is the cost to own once you own it. Okay, this is what it costs to own it today. But what if my roof got torn off because I'm in a high tornado area or something like that? And it's likely that every 3 years or 8 years or 15 years, whatever it is, people get their roofs torn off or at least damaged around here because we live in one of these heavy tornado areas.
Yeah.
So I look at this as one more opportunity for buyers to assess what is the risk of owning this asset once I have it in my possession.
So if you were in a more, let's say you were in California,
Okay.
and the numbers hold true that 80% of people really have some consideration for a climate risk when evaluating the purchase of a home.
Yeah, because like of all the stuff that they've been dealing with.
Could it be bad where most of these scores would be on the higher side of bad, right? And they say, "Oh, I don't want that home." Like what? Like as a realtor, you get in these conversations. Oh, I looked online and Zillow had this thing at an 89 on the risk scoring, right? Like I could see in a situation where it could be a bad thing, where the score is negatively impacting a perception of a home.
It's almost like you're saying, like, let's call it a section of Southern California across the board has a super high climate risk score.
Yeah.
And therefore, all those properties in that area could potentially be worth less because every consumer is going to see this and be like, I'm not going to pay that much.
Yeah.
Here's what I'll say to that. I think in an area, unfortunately, like Southern California, real estate is too expensive to own. I think it's too expensive to own for lots of different reasons. I mean, Southern California has amazing weather. You know, there's probably job opportunities. The beach is right there. The mountains are right there. Whatever reason you would move there, that's why you want to own real estate. But maybe it wasn't, represented in the price that you paid for the real estate, that these wildfires are happening pretty regularly now. Or like, I'm sure there's some kind of earthquake, record that people have been looking at for like 30, 40 years, back in like the 80s and stuff like that. I kind of remember that they look at these things. But I do think that's a good thing. As much as a seller might not like that their home might be worth a little bit less.
Yeah.
There's also the buying public that, let's say someone bought a property in the area where the wildfires just happened and no one really explained to them what the risk of wildfires were in that area before they bought. I guarantee that there's people that bought homes in that area that are losing tons of money because their insurance company is just not going to give them the value that they paid for it, and they can't live there anymore. Like their house is gone.
Yeah.
So I think it's, as much as it would hurt an area like that, it's also an area that I would consider being like very high on the pricing side. So maybe it needs to come down a little bit. Maybe this is one of the factors that brings it down.
Yeah.
You can make the same case about New York. New York, especially Manhattan, surrounded by water. What happens if they have rising waters? Like everything's gone.
Miami.
Yeah, Miami, exactly. So I think this is probably going to hurt other places more than others, but it doesn't mean it's not a good thing for people that are purchasing these assets. And also for people, when they buy these things, now they're more informed when they need to sell it.
Yeah.
So there's going to be a correction is kind of the way I look at it. And again, the last point I had right here, it's kind of like, once again, this is proving that Zillow is kind of like the major player in like real estate data, that they continue to be the leader for consumer-facing real estate websites. And again, I'd probably say out of agents that do purchase leads in the cold lead generation model in residential real estate, that Zillow's number one, and they're number one for a reason. So
I wonder what you said they're number one. I wonder what their revenue breakdown would be, like in generating, ads online, leads.
Mm-hmm. We'll have to break that down on one.
Yeah, it'd be interesting to see, where they're getting the majority of their money.
Yep. All right, man. Why don't you shut us down?
In the beginning of this show, we read the review from Keon on Apple. So if you enjoy the show, go there, leave a review. If you want to reach out to us directly, you can email us at bricksandrisk@gmail.com. And then you can follow us as well on socials, Instagram, Facebook, YouTube. And we also have a group on LinkedIn as well, where we post out some pretty good information there. So look us up.
Yeah. All right. That's all we have for this one, folks. Thank you for tuning in again to another episode of Bricks and Risk. See you soon. Thank you for joining us on another episode of Bricks and Risk. Our goal is that you walk away with 1 or 2 valuable nuggets, and we greatly appreciate you sharing your time with us today. You can find all B&R episodes on Spotify, Apple Music, YouTube, and anywhere else you get your podcast content. Until next time, keep learning and keep growing.